Good morning. Construction and mining equipment are going to be in high demand over coming years as large parts of the world become more developed and urbanized. These industry analysts forecast compound growth of construction and heavy machinery to grow 6.6% per year through 2030, driven by urbanization in South America and Asia. Asia will dominate the market for heavy construction machines, and China will be the most important driver in Asia. And market leaders such as Caterpillar, JCB, Volvo, and others are very well positioned to benefit from all this growth, presumably. The problem is that they aren't. This comes from Equipment World, and in journalism, this is called burying the lead. Caterpillar Construction Equipment Q1 sales up 6% in North America. That's the headline. First paragraph, though, says Caterpillar sales are going down everywhere else. That even understates how bad the trend is at Caterpillar. This is from their second quarter earnings report in July. Sales of Cat machines in Asia Pacific was down 24%. Europe, Africa, Middle East off 12%. Even North America was down in Q2. In resource industries, things are even worse. This is the mining segment. This is the most profitable segment on a per piece basis for heavy equipment. Asia Pacific is down 37%, Africa, Middle East off 19%. All of that adds up to what should be a disaster of an earnings report, but a couple of things made it seem less bad. Caterpillar guided lower sales for 2024 full year after previously saying it would be flat. Declines in sales of construction equipment and mining gear are the big reasons why there. And the only good news was that Caterpillar reduced manufacturing costs by $77 million, but was able to raise prices by $578 million. So that's $500 million in profits there. That's probably not going to repeat, though. An enduring reduction in production costs accompanied by a strong increase in pricing power is usually a one-off. Still, that's a big number that obscures Cat's problems in the global market where their sales are falling sharply. But the mining industry is growing worldwide. This chart is capital equipment in mines that do not produce iron. It hit an all-time high last year with big growth, again, in cobalt, nickel, copper, and a doubling in capex for lithium mining. Overall investment was up 10% in 2023. Industry-wide, the experts are calling for 5.5% compound growth, and these analysts are slightly higher at 5.8% through 2030. So all of these new mines and construction projects around the world, they do need equipment, and they're not getting them from Caterpillar. How about Volvo? Things are just as bad there, down 15% year over year in Q2. Volvo Asia Pacific dropped 11%. Globally, the mining industries are up 7% or more, and Asia up big. But Caterpillar and Volvo are both losing market share across the world, and especially in Asia. There are several major factors now hitting Caterpillar and Volvo and JCB and the other Western brands. China is pushing for self-sufficiency in food, energy, and critical technologies. Many of China's key suppliers in technology are US companies, so there is a strong but quiet push for delete A, or delete America, in semiconductors, cloud computing, artificial intelligence, high tech. But the overarching strategy is across all of China's key supply chains. They want to delete everybody from their access to food, energy, minerals, and raw materials and technology. This is a 500-page survey of the mining industry, and here are the top mining companies in the world. These are the firms that do the hard work of digging the ores out of the ground and haul it off to refineries. We've highlighted in yellow the Chinese companies. In blue are mines and BRICS countries, the emerging economic bloc that's already self-sufficient in food and energy and manufacturing. And so if you see a mine here that's in yellow or blue, Caterpillar and Volvo isn't going to have a lot of success there anymore. In the middle there, Eurasia Mining, Petropavlovsk, Alrosa through Ural Mining, those are Russian companies and should go without saying that Caterpillar isn't going to have orders from there anymore. CSN Mineração is Brazil, Valadero, Guadalcanal, those are Argentine, and then Colombia and some big African mines. These are by location now. China has investments in some of these companies in East Europe, Australia even, and as we say every week, China owns the world supply chains for raw materials, and so most of the mining output from these mines are coming to China. Under China's drive for self-sufficiency across all their supply chains, if there are domestic alternatives to Caterpillar or Volvo, those machines are going to be replaced by Chinese equipment makers. And China has a lot of heavy equipment makers. The heavy equipment market in China is like so many others here. It's ruthlessly competitive, no dominant players. In North America and Europe, these are the brands that you see on every single construction site or mine. C&H is Case New Holland. Those companies dominate in North America and Western Europe, but together they add up to just 40% of the global market. That's all. That leaves 60%, and Chinese companies are most of those. It's Chinese heavy equipment makers, after all, which built all the new buildings and highways and the subways and the railroads and the airports here. It's China that laid more concrete in just a few years than the United States did in a whole century. China still has another 400 million or so people to move to cities over the next 2 decades. That's China. Coming up is the urbanization and development of South Asia, the Middle East, Africa, South America. So who should we suppose are going to be doing and getting those heavy equipment orders? Equipment from Chinese brands costs less. China is already their biggest customer for energy and raw materials, and they can buy everything they want from Chinese factories without going through Western banks. Caterpillar and Volvo, small handful of others, but Cat and Volvo, probably most notably, have an almost mythical reputation among heavy equipment operators. I've tried to sell against Caterpillar, and it's no fun at all. They're without peer with respect to quality and reliability in North America and European markets, and among the contractors who really know heavy machines. Cat equipment built our interstate highways and our airports and our bridges, and they're still crawling over our biggest construction jobs. All true. But China and Asia have laid hundreds of thousands of miles of new highways, dozens of new ports, hundreds of airports, and tens of thousands of convention centers and hospitals and schools and universities, shopping malls and new residential construction compounds. It was Chinese equipment tool makers that did all those jobs. The world is being splintered now into North America and Western Europe and everywhere else. North America and Europe have high trade barriers and high costs, and they can lock out Chinese iron just like they've locked out Chinese cars, Chinese solar panels, Chinese farm equipment. But the rest of the world is buying from China. There is a global boom in construction, building new cities and trains and mines, and all those projects will be needing high quality equipment. But if those jobs are in China or in a BRICS country, or at a mine where China's the biggest customer, Caterpillar is not going to get any of that business. This is Danba in Sichuan province. Be good. His co-workers and his family and his friends and his nation to Christ.